Hi everyone. So now let's continue and let's solve this question again. This time, instead of using the periodic method, we'll use the perpetual method. The perpetual method means that each transaction will be recorded and inventory balance should be calculated after every transaction, whether it's purchase or sale. All right. So it's the same data that you guys have seen in the previous video. And now we'll draw a table to find the perpetual value for first in, first out and AVCO method. So let's start off with first in, first out. Now I would ask everyone to draw up a table themselves after this video. So we will keep one column for purchases. We'll write down the quantity and price. One column for sales. We don't need the price for sales. We just need the quantity. And we'll have a balance column. In the balance column, we'll mention the quantity of units, the price, and the total dollar value of the inventory. And these are the dates. So for example, I've started off that in the balance, I have opening inventory 10 units at 80. So this inventory is worth $800. And 8th May, when I bought new purchases, 20 units at 90, it got added to my balance. So think of the balance to be the stock of inventory in your warehouse. This is dollar value 1800. Right? So remember, under first in, first out, we keep different inventories at different prices separately, whereas under AVCO, we'll combine them. But for now, we'll keep them separately. So if we continue with our transactions, on 9th May, we made a sale of 11 units. So in this column, I'll write 11. I'm selling 11. Now, remember, it's first in, first out. So how will you sell? You will first sell the oldest inventory. So the oldest inventory that I have is this unit over here. So I'll first sell these 10 units. So you can say this stock has now been cancelled out. And I need to sell one more unit, which I'll sell from this. That's 20 units over here. So in your balance, you'll be left with 19 units worth $90 at $17.10. So this is the stock of balance left. So we initially started off with these two balances. This was your opening inventory. This was your purchase. Out of this, your opening inventory has been sold. From this, one unit has been sold. So you're still left with 19 units. That's at $90 worth $17.10. Now, as new inventory arrives, just keep on adding it. So for example, on 12th May, we get 35 more units at 85. So I've added that in my balance. So this is worth $29.75. Also note that we are treating these two stocks separately. So this one, that's 19 units. This is at 90. This is 35 units at 85. All right. So now let's continue with the transactions. So the next sale that we have is on the 17th May. That's for 31 units. Now remember, again, it's first in, first out. So you have two separate stocks. I've highlighted them as well. We have these 19 units and these 35 units. It's first in, first out. So what I'll do is I'll first sell off these 19 units. So these will be eliminated. They will no longer be there. Then I will sell 12 units from this batch. When I sell 12 units from this batch, I'll be left with 23 units. That's my outstanding balance after the sale. 23 units worth $85 each. So that becomes $19.55. Please understand that this batch has now been sold, and out of this 35, 12 were sold additionally because we had to sell 31. So 19 went from here, 12 went from here. So you're left with 23 at 85. Now on 20th, when we buy 32 more units at 93, that will be added to this balance.
Quick pause. If you're finding value in this explanation, there's so much more to discover. At Alt Academy, we break down every A-level concept with the same level of clarity. Now, let's continue.
So now let's move to the next sales. Please don't get confused about these transactions. We're just highlighting what is left. So on 23rd, we sold 18th May. Now after that, what should happen? Remember, we have two separate stocks now. We have these 23 units and 32. Now for 18, I will sell it from this stock over here, right? Because remember, everything else has been wiped out. You're starting from here. So you will sell 18 units from this batch. So you'll be left with 5. That's over here at 85. And this 32 is as it is. So this 32 is also part of my balance. But on 24th, when I sell 12, so I will sell this 12 from this 5. So now this 5 will also be wiped out. This is no longer there. I have to sell 7 more. I'll sell 7 from this batch. So this will become 25. 32 minus 7, that should become 25 at 93. So this is 23.25. All right. And now we buy 23 more units at 100. That gets added to the balance. So finally we have to sell 26 units. Now everything else we've marked. Everything else has been sold. So like forget this. Just focus on these two items. I have to sell 26. So I'll sell 25 from here. So this batch is also wiped out. And I will sell 1 unit from this batch. So 23 minus 1, will be left with 22 units. They are worth $100. And this 2200 becomes the final value of your closing inventory. If you guys recall from the previous video, this is the same answer as periodic. So first in, first out, periodic and perpetual should give you the same answer. But as you guys can see, we've kept a detailed record after every transaction over here. This is how it is supposed to be done. I would advise that you should solve this table by yourself. Just go step by step after every sale. Start selling, make sure that the oldest stock is first sold, and then you move to the remaining stock. You can mark the outstanding stock over here and you should arrive at this number. All right. Now let's do the same exercise with AVCO. Okay, now let's draw the same table again for AVCO. We have purchases, sales. We have the balance, but remember under AVCO, we need to find an average price. So our treatment will be this. We'll first write our opening inventory. We'll write our purchases. Now, they both cannot be considered as separate units. So we will have to find the average price. So after every purchase for AVCO, you will have to calculate the average price. How will you do that? Just add up the quantities over here. 10 plus 20, 30 units. The value 800 and 1800, that's 2600. And you should arrive at the average price, which is 86.67. That's simply this 2600 divided by 30. You arrive at 86.67, which is your average price. Now, when you sell your first stock, you will sell it at this average price, or this average price will be subtracted from your inventory. So moving on the 9th May, we're again selling 11 units. Now it's very easy from this 30 because our opening and purchases have been combined into one separate group over here. So we have 30 units. From this 30, sell 11. You would be left with 19. They will be valued at 86.67, the average price. So the value should be 1647. All right. So just subtract from the total at the average price. Now on 12th, remember a new purchases is coming up. So we'll take this purchase, first find the value 35 at 85. That becomes 29.75. Now again, we would have to recalculate our average price. How would we do that? So I had 19, I bought 35 more, that's 54 units. If you add up the value, that's 46.22. And if you find the average, that becomes 85.59, which is 46.22 divided by 54. And you have the new average price. So the next transaction is a sale on 17, 31 units. So from this 54, sell 31. You'll be left with 23 units at 85.59, which is our average price up till now. That's 1969 inventory. On 20th May, we buy 32 more units at 93. They get added. First find the dollar value, 29.76. Now find the average. 23 and 32, that's 55 units in total. Total dollar value of these two units are 49.45. So you will now recalculate your average price, which becomes 89.9. Right? Now on 23rd, 24th, you're selling. Just simply subtract it. 55 minus 18, 37 units. 37 minus 12, 25 units. And they will stay at the average price 89.9. On 25th, you buy 23 units at 100. That gets added 2300. Recalculate your average price, which is 25 units plus 23, that's 48. Dollar value 45.48. And if you divide that, you get your average price 94.75. So the final sale that you will make on 26th. So from this 48, just subtract 26. You'll be left with 22 units at 94.75. And this becomes your closing inventory under AVCO method. Alright, so your inventory has been updated after every transaction. You should also note that AVCO Perpetual is giving a different answer than AVCO Periodic. So for first in, first out, you should expect to get the same answer. But for AVCO, there will be a different answer between periodic and perpetual. But this is a more detailed and comprehensive measure where we've taken out inventory after each transaction.
Our complete A-levels accounting course is waiting for you on our website. In addition to accounting, you can also find business, economics, maths, and 4 other full A-level offerings. So thousands of students who've already unlocked their potential. Visit All to Get Me right now.